When was the last time you did something for the first time? You remember that feeling of hesitation. Maybe you're not ready. Perhaps you're not good enough. You doubt yourself. It's a long road ahead. And right now you think, safe is a good place to be. You take a step back, but in doing so, you see the whole picture. You remember the stakes you were brave enough to take. So you shout at the unknown no longer, because you are your own master. You rise up, because you know you're not alone. Because you stand on the shoulders of the ones before you. And through them you realize you are more afraid of not trying than failing. They hold your hand, lead you to the peak of your potential. And once on top, you take the leap and do it. The first time you flew and tasted freedom. The first time you went the extra mile and never looked back. The first time you understood that something so small could change the course of your future. The first time you put yourself first. At First Metro Asset, we value you and your achievements. As we navigate through this better normal together, we are here to help you cherish your firsts and make those moments last.
How to start your investment journey with FAMI. Go to www.fami.com.ph and open an account online. Fill out the necessary information. Upload a copy of your valid ID and signature. Here are the list of valid IDs we accept. Attend your online interview. Lastly, make your initial investment in any of our available payment channels. Expect an SMS from FAMI to confirm your account opening and subscription.
With nearly 6 decades of investment banking experience in the Philippines, First Metro Investment Corporation knows exactly how to navigate unexpected events, including the COVID-19 pandemic of the past couple of years. As the investment banking arm of Metro Bank and as a prime mover in the development of the Philippine capital markets, First Metro uses its in-depth understanding of markets to find smart solutions for its clients. That is why it won the Asia Money Award for Best Securities House in the Philippines in 2022. Much of the hard work behind the scenes is spearheaded by 3 people. Jose Patricio Dumlao, who is First Metro's president, working with Daniel Camacho, Executive Vice President and Head of Investment Banking, and Peter Anthony Bautista, First Vice President and Head of Sales and Distribution. Together, they ensure that First Metro offers a complete suite of services to its clients. This spans everything from debt and equity underwriting and financial advisory to government and corporate securities brokering, equity brokering, and asset management. First Metro's underwriting strength is complemented by its ability to distribute widely, not only to its corporate and institutional clients, but also to its retail clients. When it comes to its retail reach, First Metro leverages the strength of the branch network of Metrobank and the growing clientele of its online brokering arm, First Metro Securities. This means that across primary ECM and DCM, First Metro worked on some marquee deals in the past year, giving it a market share of 87% of all capital markets transactions in 2021. But that wasn't all. The firm also ensured its clients and the investing public were informed about key market developments amid the pandemic. It did these through investment literacy webinars and market briefings, both of which got a solid response from clients. First Metro is not staying still. It is always keeping an eye on finding new business opportunities and enhancing its existing capabilities across products. All these factors ensure that First Metro remains a front runner in the Philippine investment banking industry.
Trading on the go? Here's First MetroSec Go for you. Easily open your account today with this app. You can download the First MetroSec Go app through Play Store or App Store for free. If you already have it on your device, simply open the app and click Sign Up Now. Next, you need to create a user ID, read and agree to the terms, and provide these information. Once you're done, click the link on the email verification sent. Now, let's complete your account application. First, input your account information. Then, provide your user information. Next, accomplish the investor profile form. Almost there! Read and agree to the terms and conditions. Then click Agree. You will then receive your reference number through the app. Don't forget to save this number because you will need it for your initial deposit. Next, upload or take a photo of these requirements. 1 valid ID, 3 signatures on a piece of white paper, proof of address, and proof of bank account. If you're self-employed, there are additional requirements. Now let's fund your account. You can make your initial deposit through bills payment, online fund transfer, over-the-counter deposit, or remittance. The minimum 5,000 pesos or $100 can be used to invest in stocks, funds, and bonds. Next, you will need to verify your identity. Simply take a photo of your ID and take a selfie. We're all set. An email confirmation will be sent to you in 2 to 3 business days. Happy trading! For more information, visit our help center at help.firstmetrosec.com.ph. All the options and convenience within your reach through International Finance's best online broker and best online trading platform for 4 years in a row. With First MetroSec, it's your future first.
Right. Hello and welcome to Investment for Everyone. I'm Ingrid and I will be your host for this event. And I'd like to welcome you in an afternoon of fun and learning with FAMI. And our objective today is to lead you in discovering the investment that's right for you. I would like to give you a brief background of FAMI. For more than 15 years now, First Metro Asset Management has been offering mutual funds and promoting savings and disciplined investing. And one of our corporate social responsibility is to actively pursue investment literacy among Filipinos. And part of this is providing relevant and informative seminars to individuals from different walks in life. Now, please say hi. Alam ko ang dami nang nag-hi dito sa chat box natin. And please state where you are tuning in this afternoon. Also, you may type in the chat box if what is your first investment ever, and are you already investing? Type in yes or no. Yeah. So yes, there's a greeting from Rome. Yes, good afternoon, Miss Monette. I think it's still early in Rome, so good morning. And um, yeah, let's check the others. Yes, good afternoon, Sir Virgilio from Riyadh, Saudi Arabia. Yes, I think it's also morning in Saudi Arabia. Good morning, Sir Virgilio. But good afternoon, of course, to Sir Benji de la Peña. Yan. Sir Erwin Awa from Cebu. Good afternoon, sir. Yan, ang dami. Thank you so much for tuning in. Yan. Sir Lee, ayan. Good afternoon. Madaming from Saudi Arabia this afternoon. Yes. Ayan, ang dami na rin palang investors. And some also answered no. So stay tuned because I know you will learn a lot from today's session. Ayan, good afternoon. Ang dami. Thank you so much for tuning in, guys. And also, if you are here and you joined our pre-event game on Facebook, please stay tuned until the end as we will announce the three lucky winners after the discussion. So if you have any questions, of course, during the presentation, please type them in the Q&A section below, and we will also have time for questions during the panel discussion. So before we start, we just want to check how you are in terms of your desire to invest. Please answer our short poll flashed on your screen. Okay, yeah. Question is, how confident are you to invest today? Are you very confident? Are you still deciding, or you want to know more about investing? Okay, sige, let's give a few seconds for you to answer this poll. Yes, good afternoon, Sir Francis from Makati. Right? Medyo nagkakatalo yung sagot natin sa survey, but this is good actually na medyo diversified yung mga participants natin this afternoon. Wow, okay. So majority of you answered you want to know more. Okay, so I think this session would really help you to boost your confidence when it comes to investing. And um, other than that, most of you as well also answered very confident. So I hope and I know you will learn more about investment this afternoon. So to kickstart the event, I am pleased to introduce the keynote speaker for today's event, Ms. Karen Liza Roa. Ms. Roa has over 25 years of experience and expertise in the fields of finance with a career that spans both domestic and international banking operations. She has a wealth of experience that fuels her financial skills and has worked with some of the most renowned global companies in banking and asset management, such as Chase Manhattan Bank, SunGard Asia Pacific, Trust Banking, groups of PhilAm Bank, and Citibank. She also served as a president and CEO of PhilAm Asset Management and a lecturer at the top countries' universities Ateneo de Manila, and also University of the Philippines, teaching business courses on strategy, investment management, and financial services. She is currently the president and CEO of First Metro Asset Management. Let us all welcome Ms. Karen Roa.
A pleasant Friday afternoon to our listeners. Thank you for being here. The last couple of months have been a roller coaster of a ride. It began with the exuberance of a pandemic that we thought was coming to an end. But lo and behold, the Omicron continues to linger within our midst. We thought the war in Ukraine was too far away to have any significant bearing in our lives, with the exception of seeing humanity's atrocities. Yet we soon saw gas prices at unprecedented high levels. In my neighborhood, gasoline reached a high of 95 pesos per liter, and now the diesel fuel is more expensive than gasoline. The dollar ranged from between 48 to 50 in 2018, and we didn't think that it was going to stray too far away from those levels. Now we're happy if it stabilizes at 56. Inflation rate, or the rise in prices, is soaring. Eggs is now 15 pesos a piece. What used to be 2 pesos and 50 cents a pandesal is now 5 pesos and 50 cents, sometimes even 6 pesos, depending on the size. We know how these impact our expenses because we try to spend less. But do we know how these affect our savings and investments, other than that there is less left? And what kind of habits should we have, or do we have? Regardless, however, of the times, investments and savings is for everyone. There is no exception. This is not complicated, and there is something for everyone. No amount is small or big enough, nor is there any right moment. Every moment is the right moment. If we have this mindset, then half the battle is over. The what's, the hows will be easy. So this afternoon, we have collaborated with our sister companies to talk about the what's out there, how to get started, and what is best for you, because not a one size fits all. Rest assured, it's easy and simple. Thank you for joining us, and we hope to partner with all of you for your investing needs. But before that, don't forget that a journey of 1,000 miles begins with a single step. Good afternoon.
Yes, thank you so much, Ms. Karen, for the inspiring words. And truly, investing is for everyone. But sadly, not everyone sees the opportunity to invest for their future. Now, what's keeping the common Juan to invest, to save and invest nga ba? So from not enough money left to save and invest, lack of awareness on how to do it, to the common bahala na attitude when it comes to money. And clearly, us one still have a long way to go when it comes to investment literacy. And before we move on to the next part of the program, please watch this quick guide to understand the difference between saving and investing. Before we get too deep into this topic, let me bring you back to the basics. Let's say that you and your barkada have received your salaries. Now, it doesn't matter how you've earned it, but let's say you earn around 20,000 pesos monthly. Now, where do we put this money? We have three options. Number one, you guys can spend it. Of course, hindi naman natin ito maiiwasan because you have to pay your bills and you need food to eat. Kailangan natin gumastos para mabuhay. And there's nothing wrong with that. Second is, you can save it. Ito yung pera that you set aside to make a purchase in a short time. It could mean tomorrow or 3 years from now. Ngayon, let me tell you a secret formula that I learned from my boss when it comes to money. Dahil ito yung usual practice natin. Income minus expenses equals savings. The best formula is income minus savings equals expenses. You see, it doesn't matter kung 5,000 pesos yung kinikita mo or 500,000 pesos. What matters is how much money you saved. And dito papasok yung third option natin. That is, you can invest. In my opinion, investing is the better option. Why? Because unfortunately, when you save and no short-term purchase is needed, there is an opportunity loss. Dahil sa savings, there is little or no opportunity at all for your money to grow. So, lahat naman tayo gusto natin kumita. So, as you can see in the video, there's a big difference between investing and saving. So, sabi nga, saving means putting your money at rest. This is usually done for short-term goals. Whereas in investing, it is putting your money at work, preparing yourself for mid to long-term goals. So, if you're ready to make investing your first priority before the year ends, or you are here to diversify your investments, you are in the right place to learn. Okay? So, ayan, let me just share with you some questions that you should ask yourself before you go to investment. Ayan. So the first one is, why do I need to invest? And then, what should be my considerations when investing? What are the available investment instruments for me? And which investment instrument should I choose? That and more will be answered by our speaker this afternoon. And let me introduce to you the first Vice President and Head of the Sales and Distribution Group for First Metro Investment Corporation. He served as director in TBC Capital Investment Corporation, SBC Properties and Resiliency. He has an undergraduate degree in BS Mathematics with a major in Actuarial Science and Statistics from the LaSalle University. He has also pursued a master's in Business Administration program from the LaSalle University and a master's in Applied Business Economics program from the University of the Asia and the Pacific. And he served as president of the National Association of Securities Brokerage Salesmen from 2014 to 2015. We are privileged to be with Mr. Peter Bautista this afternoon. Sir Peter, the floor is yours.
Afternoon. Afternoon. Hi guys. Thank you. Well, thank you first, Ingrid, thank you for the very flattering introduction. Not needed, but thank you for it. And welcome to everyone to our Investment for Everyone webinar. As Ingrid mentioned, I hope to share some of my 18 years of experience in dealing with clients and what they want, and try to impart to you some of their tips. Ingrid, I need some help with the screen sharing, please. There you go. Thank you. Okay. Is it showing now? Okay. So as the name of the webinar implies, diba? So this is really just to try to teach everybody how to invest or why we should be investing. My session goals this afternoon, I want to show you why you need to save. I think I will take off from what Karen mentioned earlier and what Ingrid showed us and what the video showed us. Wala nga lang akong magic, katulad ni Ingrid, but I will try my best to share with you why we should be investing. Also this afternoon, I will try quickly to get through most of the products in the market that you can take a look at. Okay, and finally, I hope to give you a better appreciation of the features of each product and how we're going to make money off of them. At the same time, the risks. It would be a disservice to all of you if I just tell you the benefits. I need to tell you the risks as well of each product. Okay, so let's get real. Money is finite. Okay, nauubos po ang pera. Okay, so you need to invest. Nauubos po ang pera at theoretically, because of inflation, bumababa po yung value ng pera. So again, that answers the question of investing or not. Our income generating capacity hindi ho tayo empleyado for the longest time. We will retire at some point. We will want to settle down and take it easy at some point. So we have to we have to prepare for that. Also, we still do actually. We have needs and wants. And those things, some of those things need some preparation. So not all of it will be answered by salary. Some of it can be answered by investments. Like several years down the road, you want to buy a car, you want to buy a house. So hopefully investing can help you achieve those needs and wants. And finally, tomorrow is unpredictable. You never know what's going to happen tomorrow. As Karen mentioned earlier, the things that happened to us this year, Ukraine, the pandemic 2 years ago. So those things that are unpredictable, unexpected, we have to set aside a little money, hopefully grow it properly so that we are ready for whatever fate throws our way. Okay. To those, as I think in the survey, it was very evident, some of you are already investing, some of you are undecided, most of you are confident. So when you've already invested or planning to invest, you will actually be in what you call the financial markets. But for this afternoon's purposes, we'll be talking about just two of the markets in that framework. We'll just talk about the capital markets and the money markets. Maybe another day na lang si Forex, derivatives. But for our afternoon, capital market and money market tayo. Okay. Your financial markets is basically divided into two main markets, sub-markets. One is the capital market and the other is the money market. Your money market, as you can see on the screen, is really meant for short-term funding, or in the case of the buyers, it's short-term instruments that you can participate in. For the capital market, on the other hand, we're talking about long-term instruments or long-term projects or long-term funding. So if you want to put it in terms of years, money market is less than a year, or no more than a year, and your capital markets are normally over that. So a year, up to 10, up to 20. So it depends on the particular instrument that you're going to get yourself into. And then there's a subclass of your capital markets. Your capital markets are either debt or equity, which I will get to in a while also. Okay, this is what most of the instruments you will be seeing later. I will try to be sharing with you later. There are treasury bills, time deposits, there are short-term commercial notes, repurchase agreements. So all of those we'll try to go through later. But as I try to impart a little knowledge and hopefully a little experience with you guys, I hope you can also engage us later. Make this a very engaging afternoon, and throw us your questions when the Q&A period is on us. Okay. Your capital markets, as mentioned earlier, is made up of two particular sub-classifications. One is debt market, the other one is your equity market. When you actually take a look at it, it's called the fixed income market, and the other one, I think most of you hopefully are invested in, is what you call the stock market. All right. The debt market has bonds, notes, commercial papers, loans, which I will try to get through later as well. And the two kinds of stocks, the two kinds of equity instruments are what you call the preferred shares and your common shares. Okay. Also, in the course of your being investors, you will hear words or the term the primary market and the secondary market. Okay, let's start with the first one. A primary market transaction or a primary market purchase just means you are the first owner of that particular stock when it hits the public. You are the first owner of that particular bond when it gets listed on the exchange. It becomes a secondary market transaction after you start selling it, start trading it. So from first owner to second owner, the third owner, that's when you start trading. That's what you call a secondary market transaction. So you will go through this throughout your life as an investor. Okay. Also going through this very quickly, when you talk about the financial markets, you'll hear the terms borrower or issuers. That's either a government or a private corporation. You'll hear terms like in lenders or investors. So that will either be individuals like ourselves, Juan de la Cruz. It will either be corporations or even institutions like First Metro Asset Management. There will be intermediaries like banks or investment houses like First Metro Investment, brokers like First Metro Securities. So you will get in touch with all of those over the course of your investing life. And these are basically the institutions that will be selling stuff to you. You will be getting your bonds, your stocks from these participants. And finally, I have to say this, you will also hear about the regulators, the PSE, the SEC, the Insurance Commission, so on and so forth. These are the guys who make sure that whatever hits the market is safe for you to invest in. At this point, I will be going through the different kinds of securities. I hope I'm not going too fast, but I'm trying to keep it as lively as possible and trying to keep as short as possible so we need more time later for the Q&A, guys. Okay. Your securities, let's start with what the security is. Okay, it's a fungible, negotiable financial instrument. Okay? By fungible, it means if you buy, for instance, a treasury bill, a 91-day treasury bill from First Metro, from Metro Bank, from another institution, it's the same security. It is interchangeable. It is, there's nothing different about it. The only difference is probably the price. So a 91-day treasury bill is a 91-day treasury bill everywhere. A financial instrument, meaning it has economic value. Okay, and it actually means that you can actually trade it. You can, it is at some point, you bought it with cash, you can get cash for it in return after you trade it. Okay, that brings me to our debt securities. Okay, a debt security is basically what it is. Utang po siya. Okay, it is somebody borrowing money from you. Okay, in this case, the securities or the types of instruments that these are normally crafted into are either bonds, deposits, notes, commercial papers. What it really means is, since it's a debt, since utang po siya, it means at some point in time, you will be earning interest because you lent money, and at some point in time, you will get back your principal. If you note there, it's issued for a fixed term. So I will go through different tenors that you will normally see in the market. But in a nutshell, I've seen pretty much everything up to a 25-year paper issued. I've seen, or we've sold basically 2 years, 3 years, 4, 5, so on and so forth. And as I mentioned earlier, there are securities that are 91 days, less than a year. So you will see this throughout your careers, your investing careers. Okay, another instrument which we will be touching this afternoon is what you call equity securities. Okay, equity security is basically ownership. You own part of any company that you buy a share of. It may not be a huge part, but it may not be a substantial part, but it is a part, it is ownership nonetheless. Okay, that means you are entitled to get a share of the income that the company declares, and you are entitled to voting. Okay, you are entitled to capital gains if the stock goes up or down, or up rather. You will be entitled to those gains. Okay, we also have what you call a hybrid security. Recently, this has not really been in flavor, so if you don't mind, I will not go through this completely, but what a hybrid security is, it matches what a debt security is, a feature of a debt security, and the feature of an equity security, which again makes it hybrid. So the characteristics, but what it will either be a bond or still a preferred or a share, just has the features of the other asset class. Okay, let me start with the most popular kind of security out there in the market. It's called the government security. So evidently, the issuer here is the government. We are talking about the Bureau of Treasury borrowing money from the public, from the banks, basically, and using those funds to implement its projects, to run the government, basically. There are instances also that the BSP issues paper. It's also called the government security. In the past, government and agencies like HDMF, the NFA, they used to issue bonds as well. It's all lumped under the term government securities. What's really interesting about government securities, guys, it is free of default. Okay, just a little bit of anecdote. The government, the Philippine government, the Philippines has never ever defaulted on its peso obligations. Okay, unlike other countries, the Philippines has never ever defaulted on its peso debt. Okay, please note that at any point in time, this is a little flippant, but at any point in time, the government can actually print money. But of course, inflation, money supply, they have concerns there. But it can print money. But more seriously, the government can actually sell assets to generate the cash. So at no point so far that I've experienced or even told or seen, at no point has the Philippines ever defaulted on its debt. Okay, your government securities basically has three types. The first type, and they're normally defined by the length of time until it matures, or what we call, or what you saw earlier, what you call the tenor of the instrument. A treasury bill, as you can see, is the short-term version. It's a short instrument. It is issued at the onset, 91 days or 3 months, 182 days or 6 months, or 1 year, that's 364 days. It's normally issued at these tenors, but at some point in time, you can actually buy treasury bills that are on the run, meaning they're less than 91 days. You can buy them in the secondary market. For some are being sold a week to go, 2 months to go, 3 months, 7 months. On the run securities, basically hindi na eksakto yung tenor niya, but it's still available in the market. Government auctions these off every week, and they're normally issued at a discount. Okay. By a discount, I mean, if you want to buy, for instance, 1 million pesos worth of a treasury bill, you will only be paying, for instance, 999 or 998,000 pesos. So it's discounted and it's not interest bearing. So you will only get your kita, yung income mo, after it matures in 91 days or 364 days. So that's the income that you make. There is the long version of a government security. It is what you call the fixed rate treasury note, or we popularly call it an FXTN, or a treasury bond, or a treasury note. These kinds of instruments are issued 2 years, 3, 5, and as mentioned, as long as 25 years. To be very honest with you, the 25-year paper that they used to issue, they issued once. Actually, you'd be surprised. It was retail investors that actually bought it, aside from your traditional insurance companies or big retirement funds that buy it. Interestingly, there were a lot of retail investors willing to buy it. Please note, if their outlook, as mentioned earlier, my earlier slide, if your outlook, if your need, if your want, if your plan, if the why involves a 25-year horizon, you can buy instruments like this. So again, it goes back to the why you're buying it and what the plan really is. As mentioned, this instrument is interest bearing. So that means every 6 months, you will be getting interest. You will be getting your coupon. They call it a coupon. Of course, it's less 20% tax, but you will be getting it regularly until the bond matures. So if it's a 2-year bond, so you will be getting it for 2 years every 6 months. So that's four coupon payments. If it's a 20-year bond, you get the idea. So again, there are people who naturally buy long-term paper because that is the requirement, that is the particular need. But there are also investors out there that look at treasury bills more than the treasury notes. Again, it depends on your requirement, your particular requirement. Okay, and finally, the government a few years ago, well, basically around 2001, they started issuing what you call a retail treasury bond. A retail treasury bond is a government security, and as the name implies, that is purposed to be invested in by Juan de la Cruz, by normal folk like us. Okay, whenever the government has an RTB issuance, the minimum investment size for an RTB is 5,000 pesos only. Okay, so what the government did, or what the Bureau of Treasury did, is they made it so accessible to Juan de la Cruz at a price, at an investment that's very affordable, at the price that an institution is enjoying. Okay, what happens with an FXTN or an RTB is that the rate is fixed throughout the life of the bond or the note, in this particular in the note. So you will enjoy Juan de la Cruz, who buys 5,000 pesos, will enjoy the same interest rate that First Metro Asset Management will enjoy, or with First Metro will enjoy, as long as they hold the bond. Okay. The other difference with an RTB, between an RTB and an FXTN, since this is really geared towards retail investors, they tweaked rather the interest payment to be more conducive or more attractive to retail investors. A fixed rate, an FXTN gives you interest every 6 months. An RTB gives you interest every 3 months. So you get it 4 times a year. So it makes it, the cash flow is something that our retail investors seemingly want more of. Okay? On the flip side, you have corporate issuances. Okay? A corporate issuance is pretty much like what a government security is. It's still debt, utang pa rin ho siya. This time around, ang nangungutang po, or the one issuing or the one borrowing from the public, is a corporation. Recently, what we've seen in the market are very good names that actually tap the public funds. You have, recently we've seen Ayala Corporation, Ayala Land, we saw Philinvest. I hear right now there is Robinson's Land trying to access the market, or that will be accessing the market very soon. So these are the main difference. The structure is the same. Somebody borrows, that particular borrower will pay you interest. And it will be throughout the course of the life of the particular bond. You'll note that the pricing there, it says priced at a par or at a discount or a premium over a GS benchmark. Okay, this just means it's normally the interest rate of a corporate bond is normally pegged against the government's. So if the government is paying 5%, normally a corporate bond will pay more than 5%. So there is a spread over what government pays, because as you guys know, as mentioned earlier, the government will never default. A corporate, despite all how big it is, it's a blue chip company, so on and so forth, is not government. Despite how good the credit is, it's still not government. So market demands a little differential between government rates and a corporate issuance. In my life as a investment banker, I've only seen one paper that was priced at a discount. And that was ADB bonds, Asian Development Bank bonds, which you know how good the credit is. ADB is actually better than most, if not all, countries here in Asia. So the credit is amazing. So that particular bonds price was lower than normal GS. Okay. Just like with GS, there are different kinds of corporate issuances, the first of which are commercial papers or commercial bonds. So this is similar to what I've explained earlier about a treasury bill or a treasury note or an FXTN. It is a bond, it is a note, it is paper issued by a corporation. It can be short, it can be long. The longest bond I've seen is 20 years, if I'm not mistaken. The shortest commercial paper I've seen is 91 days. So it kind of mimics what government securities can do or does. Normally, though, it's recently, what I've seen issued are 2 years, 3 years, 5 years, 7 and 10. But there are instances that it's shorter or even longer. But right now, a tip for the guys who are planning to invest in bonds, the interest right now is 5 at the longest for retail investors, and as short as 2 in terms of bonds. 2 to 5 years is good. The corporate notes, on the other hand, similar to a corporate bond, but this one, I'm afraid, guys, is not accessible really to retail investors. A corporate note, its market is really the bigger institutional clients, the bigger government funds, the banks. But it is structured just like a corporate bond. It's just that it's limited to 19 lenders. Okay, and finally, again, just like the other issuers, there are what you call promissory notes. They're short, really short instruments, and the issuances here are normally to the tune of 15, 30 days. I've seen some issuances go as far as a year, but this is normally an instrument that tries to tap the market of those in-time deposits. Okay, so there are promissory notes out there. Not everybody does it, so there are a few names in the market that actually issue promissory notes, and there are very few, and even fewer institutions or intermediaries that you can buy these from. Okay, one thing I need to stress to everybody is not everybody, I will admit this, even I am not that there, I will not claim to be the guru in investments or in bonds, but because of the fact that everybody has different, well, people rather have different understandings and different appreciation of bonds and how to evaluate instruments and investments, there are ways to simplify how to look at it. Okay, there are what you call rating agencies, both domestic and international, that actually simplify the grading system. So it's a grade. Okay, a rate is a grade. It's a rate that's supposed to tell you, normal Juan de la Cruz like us, that if this bond is good, this issuer is good. Okay. They're really there to make sure that your bond is safe to buy, that you know what you're buying into, that a third party outside of the intermediary has certified or has acknowledged how good the credit is. Internationally, you have S&P, you have Standard & Poor's, you have Moody's, you have Fitch. In the Philippines, you have Phil Ratings, that's Philippine Rating Services Corporation, and CRIS, that's Credit Rating and Investor Services Philippines. But the more prevalent or the more accepted rating comes from Phil Ratings. Okay, so when you see, these are the different grades or the different ratings that you will normally encounter. If you're buying an international bond or a dollar instrument, you will see it graded by S&P, AAA, AA. So it goes down. So the lower the rating, the higher the rate, but the bigger the risk of that you will not get your cash or have difficulty getting your cash back or the interest back. And in the Philippines, the Phil Ratings conventions are for bonds or commercial long-term commercial papers. AAA is the best. C so far is the worst. For the less than 1 year, it's PRS1 up to PRS6. For First Metro, specifically myself, I don't think I've ever sold anything below AA. If you note, normally intermediaries will participate or take part in issuances or sell to the public, basically. Issuances are AAA, AA. I think some have even gone as low as A. This is to make sure also that what the paper that we represent or that you're buying is good for you, that the risks are understood and mitigated, and we've properly gone through the due diligence required and to make sure it's a safe issuance, basically. Okay. We're now on to equity securities. I would think some of you have experience with equity securities already, but again, to the guys who are new to the idea, equity securities, basically it's ownership. Okay, you buy one share of a particular company. You're a shareholder of Ayala Corporation, of Aboitiz, of Metrobank. Okay, you are an owner. You own one share of Metrobank. So that means you are entitled to, whenever they declare income, dividends, by way of dividends, you are entitled to your share. It's a pro rata share. So that's whenever they give out their dividends, you are entitled to it. Okay. You are also, as an owner, you can vote whenever there's a shareholders venue for you to vote on. You can actually vote, of course. Diba? Your share, the size of your ownership, will determine the impact of your vote. And also in the event that the company, say a listed company X suddenly defaults, you also have claim on the assets after it liquidates. So you're really an owner of that particular company. Okay, there is also, I mentioned earlier, what you call preferred shares. It's also equity. However, unlike common shares, it's not really representative of ownership. It's really, a preferred share really is similar to debt, because unlike common shares where you're not really guaranteed or assured when you will get dividends, or if the company performs well, does not perform well, so that will determine if you will get dividends. A preferred share, on the other hand, it requires the company to pay you dividends at predetermined times. Okay, if it's quarterly, it has to give you dividends 4 times a year at a particular rate pa. Okay, a common share, it's not really guaranteed, it's not really prescribed what dividend you will be getting. But for a preferred share, you actually know what you're getting over the course of the life of a preferred share. Some are cumulative, some are non-cumulative, meaning some you have to be paid agad, some the issuer or the company can make ipon, diba? Itatabi na, but you will still be paid at some point. Okay, they can postpone it, they can delay it for whatever reason, some cash problems and so forth. But normally, recently, it's been cumulative. So that means the investors will get paid. It's just a question of when. Recently, though, common shares have not been that much prevalent. The last time I think we issued the pref share was once last year. Unlike a bond, na you actually see a new bond issued pretty much every month or every 2-3 weeks. Okay. Okay. The next asset class I will try to share with you is what you call the money market instruments. Okay, as mentioned earlier, your money market instruments are normally securities that are less than 1 year in tenor. Okay. That means nothing, well, pretty much nothing should exceed a year. Normally, it's even closer to a month. Okay. The first instrument of this kind, which I think or I hope everybody can try to participate in, is a time deposit. Sadly, the rate of a time deposit is kind of not so good right now. Okay, a time deposit is the bank borrowing money from you over a month, over 2 weeks, over 2 months, and the bank promises to give you interest in return after 2 months, and your principal, of course, as well. That's it. That's what a time deposit is. It's a prescribed rate for a prescribed short-term period. Mutual funds, which is what our main sponsor for this afternoon's briefing is all about. I think most of you are into this already, but mutual funds are basically pooled funds. Okay, it's managed, professionally managed pooled funds. So in short, if all of the, I think 500 people who are registered or possibly in this webinar, all 500 people give us money, you have FAMI there to reinvest it in a particular asset class and make it grow for you. Okay, so the return for this particular asset class is pretty much dependent on how good the asset classes are. Okay, so if it's in equities, it goes, the value of the fund goes up. If it's in bonds, if rates go down, the value of the fund goes up as well. So that's how it normally plays out. As compared to a UITF, the real difference between a mutual fund and a UITF is a mutual fund is a company. Every mutual fund is a company that is registered with the SEC. A UITF, or a Unit Investment Trust Fund, is what it is. It is a fund managed by a trust entity. It kind of gives off the same vibe, pretty much the same operation. The main difference, like I said, is one is listed, the other one is not. So as you may remember earlier in equities, it affords you certain voting rights, certain rights if it is a company that you're getting into. And on one end, a mutual fund is closed-ended. There's a finite number of it. So that means, in theory, scarcity is there, vis-a-vis your UITF, which just keeps on taking money anytime there's new funds that are coming into the fund. And finally, we have what you call a repurchase agreement. Okay, an RA or repurchase agreement is basically somebody selling you money, selling you a security, and promising to buy it back from you at a certain period. And in return for buying it back from you, you get your interest. Okay, so it's borrowing still, but there's collateral to it. There's a security, there's an underlying security, which is basically it's bought back from you. Not so much not so much popular nowadays, but it was once in fashion. Okay. Um, okay, some other instruments here that I will go through. I don't know. Ingrid, are the slides going to be shared? But regardless, these are some of the other instruments that you will see, not necessarily falling under money market instruments, but these are instruments in the market right now. There is what you call an exchange traded fund. It's basically a stock. Okay, it's a stock. It's listed in on the exchange, on the stock exchange, and it is a stock. It is a security that's composed of different stocks, and it's supposed to mimic exactly how the stock market performs. So if the stock market goes 1%, it should go 1% up. If it goes on 1%, same thing. Sadly, there's only one ETF in the Philippines. It's called First Metro Exchange Traded Fund. Sorry for the same shameless plugging, but there is that. It is also an option for new investors if you just want to participate in the stock market. Okay, and a new instrument which I think was issued only during the pandemic. It took years to finally take off, but it's a new instrument. It's called a real estate investment trust fund. Okay, in a nutshell, a REIT is a company listed in the stock exchange. And the only thing that company owns, or the only assets that that company owns, are income generating assets. For instance, it owns malls, it owns hotels, it owns, so basically lease assets, for instance, or rental income. So you're sure that this particular company will make money at the end of the year. Okay. This particular instrument is listed in the stock exchange, and unlike other real estate stocks where it still has land to develop or office space to develop, a REIT, on the other hand, is really just all about rental income. It's all about income generating assets, which make it a viable alternative to money market instruments. Okay? Ingrid, are we doing good on time?
Yes, sir.
Okay. And I cannot tell you what to buy without also telling you to be careful of what you buy. Okay, this section is all about what you have to watch out for. Okay, this section is all about the risks of investing in so many different asset classes. Most of them are applicable to the asset classes I mentioned or the products I mentioned in one way or the other. But let's just start off with the definition of risk. Okay, risk in this venue is really the chance that what you invested in, that you will not get the interest that was promised you. Risk is all about the possibility that you will not get paid your principal at the end of the period. It is you you not getting your original investment back. If you thought the stock will go by 5%, it just did 1%. So there's the risk. That's part of the risk. Or worse, it even went lower after you bought it in the IPO. So that's how risk is defined in this webinar. Okay, some items I just want you to remember about risk. Guys, the less the risk, the less the income that you will make, or the less the reward. So the higher the risk, the higher the reward. But please note that if the reward is too good, think twice, thrice, 4 or 5 times. Because right now the market's really not that conducive to. Sorry, there's a lot of things going on in the market that you may find too attractive. If you think it's too attractive, think twice. Okay, so please make sure, though, that you understand what you're buying into. Please make sure that what you're getting yourself into the instrument you're buying, the security you're buying, you know what it's all about. Okay, but on the other hand, also, no risk, no reward. Okay, so you have to have a little risk in your life. Nandun ang kita, guys. Maybe later we'll get to talk about volatility, how good and bad the markets are. But it's normally when markets are bad, when rates are high, when prices are low, that's the time you come in. That's the time you go into a risk environment, knowing and being mindful of what it all is, and coming out at the end when things are better, and that's when you get your reward. And that's when normally when people make money. Okay. A few risks that you should know. There are things that are called market risks or news or occurrences that affect the entire market. Karen mentioned one earlier, Ukraine. It affected the entire market. The pandemic affected the entire market. Okay, and then on the flip side, there are also events that only affect a particular sector in the market. For instance, it just affects the banks. If there's a new law that's passed, it affects a particular sector. If you'll note in the past, there are news that comes about that affects the banks, affects the mining. So those things will affect the price of a stock, the rate of a particular bond. And there are also unsystematic risks that only affect a particular company. But if there's anything that I can share with you over the years that Karen and I have been doing this, at some point in time, the risks, the news will affect. The market is interrelated that way. You all know that this is really a boundaryless market. Everything that happens elsewhere, it hits us, US, Ukraine, but everything affects the market here. They're all interconnected. So just be mindful of what happens so that you are able to manage this particular risk and get out of the instrument that you're in. There is what you call liquidity risk also. So liquidity risk is that off chance that at the time that you want to get out of a particular stock, of a particular bond, or of a particular paper, you can't find a buyer. You can't get out of it. So my advice to you is just to get away from this particular kind of risk. Just make sure that the name you're buying is credit grade, credit worthy, credit good. Normally AAA names are good. Blue chip names, you really will find a buyer, readily buyer when you need to encash it already. Also, if you're looking at the most liquid instrument, I'd mentioned earlier that I may have mentioned earlier the government securities are the risk-free of most instruments, of all the papers in the market right now, specifically because it's the government that's issuing it or issuing a guarantee against it. And that thing actually trades every day. On any day, you can actually find a buyer for government securities. Between the markets that I showed you, government securities are normally the most traded. It actually has on a good in the good months, it actually has like 10 billion trades a week or a day. It has 10 billion trades a day, vis-a-vis your stock market that only does what 4 or 5 billion on a normal, non-pandemic, worrisome environment. So just make sure that you know what instruments you're getting into, so you minimize your liquidity risk also. Interest rate risk is basically whenever there are factors that affect how the rates of the market go. Like, for instance, what happened last week, the BSP increased rates, or off cycle, it raised rates by 75 basis points. So normally that will translate to a higher rate in the secondary market. So that means if you bought a rate in the morning at 5%, and then the BSP hiked its rates 75 basis points, you will not be able to sell your paper at 5% anymore. You'll be forced to sell it at a higher rate, ergo you will be incurring a loss. So what you normally need to watch out for are interest affecting news. BSP, central bank movement, the Fed, those things normally affect interest rates. Your government data normally affect the movement of interest rates. Whenever there are new government securities that come out in the market, it has an effect on the secondary market rates as well. So those are the events that you need to be mindful of. Okay, this one we talked a bit about this already earlier. That's credit risk. So this is the chance or the possibility that the instrument that you're buying, the issuer, defaults. The issuer is not able to pay you, whether it's interest or whether it is the actual investment, the principal that you put into it. Again, the answer here is make sure you know who you're buying into. Make sure you know that the instrument or the issuer that you're looking at is credit worthy. Or, diba, you can just stick to the old faithful tried and tested government, but mababa yung interest doon eh. So that's why you actually explore the riskier instrument so that you make more money. Okay, inflation risk. Okay, so this is just telling you, try to buy instruments that are doing better than inflation. Okay, last month we were doing what? June was a little over 6%, 6.1. The full year forecast of First Metro in its echo briefing last week was it'll average out at 4.4%. So you just try to outpace the market. It's a little difficult, considering you need to balance risk versus the rate versus the reward. But that it is what it is. You must be on the lookout also for how high or how fast inflation is doing, and try to either outpace it when you can, or as much as possible stay close to the inflation rate. Some people, what they do to avoid inflation risk is they start trading. Okay, they don't just buy a paper or a stock, they start buying it, selling it, repositioning and buying and selling. So that kind of exercise, that's called trading, allows you to generate more income for yourself vis-a-vis just holding on to the paper. Okay, and finally, I think this is the last risk I'm sharing with the group. This is what you call the call risk or the prepayment risk. Okay, your corporate issuers normally are financial wizards. These are the guys who know that rates can go up or down over a particular period from the time that they issued their bond. So if it's a 5-year bond, they know that there's a chance rates are going up, going down, so on and so forth. So what they do, there is a structure or a feature in most bonds. It's called a call feature. So when the time is ripe, or in other words, when the rates are low, and it's normally on the midpoint of that particular bond's tenor, your issuer has the option to call it or prepay it basically, or retire the bond. That means if you were earning 5% before, because rates are on their way down, rates have gone down, that means you will only be, how do you call it? You will only be able to reinvest it at say 3%, 2.5%. You will no longer be able to enjoy your previous coupon or interest rate because rates have gone down. Exactly what it is. I'm afraid this is something built into most instruments nowadays. And the real way out of this is really to diversify. Okay? Just make sure that you're not wholly invested in one particular asset class or one particular bond. Or if you are, make sure that by the time that that call feature is probably going to be exercised, you get out of it. Like I said, this is a feature of most instruments nowadays. So just be on the lookout. Okay, this is my last 2 slides. Ingrid, promise, 3 slides. Some things I just want to throw to everybody. First of all is direct investments or managed funds. Do you buy a bond? Or do you buy a bond fund? Do you buy equities, a stock, or do you buy an equity fund? That's what it means by direct investment, directly buying into the instrument, or on the other hand, going through FAMI, or an investment company like FAMI, and letting the professional fund manager buy for you. The other question I'd like to throw to the group: active or passive investments? Do you just buy into a fund that's supposed to mimic an index, or who will manage it for you? Or do you want to buy a bond that you will keep on buying and trading and repositioning and buying and trading, or a stock that you will come in and out of? Okay, my answer to my professional answer to all of this is I think there will always be a place in your portfolios for direct investments and a place in your portfolios for managed funds. The real answer, I think, to all of this is one, a few answers is your capital. Do you have enough capital to go direct investments? Do you have do you have enough expertise to go direct investments? Do you have enough time to go direct investments? So these things, if you don't have, if the answers to those questions are bordering on the negative, perhaps you should consider having a portfolio with more managed funds or less instruments that you have to make bantay every day, every hour. I know how it's like. If you have your own stock portfolio, you will make bantay the entire day. Diba? I've gone through it, but you will go through it. But again, not everybody has the expertise, not everybody has the time to do it, but it is what it is. So my answer, maybe Solomonic, hopefully Solomonic, but there is a place in everybody's portfolio for both direct investments and managed funds, for both active investments and passive investments. Okay, my summary, I think we will just share it with the body. If you want to take a few seconds to screenshot, this is a summary of, I think, what you will experience if you buy money market instruments, government, corporate bonds, equities, and mutual funds. So please snap away. Willing to share this. I think, Ingrid, we're going to share this if our friends ask for it. This is just a summary of everything I said earlier. Hopefully, the good points are here, and the bad, the things you have to watch out for, I mentioned it already in the risk section. Okay, as my talk ends, some tips I just want to leave to all the investors out there. Start with the why. Why are you investing? In so many words, figure it out. What you're doing it for. Number two, always read the news. Always figure out what's happening in the market, whether it's the stock market, whether it's the bond market. But always be there, be in the know, because otherwise, things can happen and you might be making misinformed decisions. Also, when you are invested, know when to come in, know when to come out. Figure it out. Okay, and stand true to your established buy and sell levels. Okay, greed, sabi nga ni Wall Street, the movie, greed is good, diba? But guys, too much greed is bad. So when you've made money, get out, come back. Nobody said don't come back. Made money, get out, come back. When you've lost money, when you hit your sell level, lost money, get out. And again, nobody said you can't come back. So just come back after those milestones, your buy levels or sell levels are hit. You need the discipline, because we've seen the market turn against people when greed is the primary thing on their minds. Okay, and understand what you're buying. Always know what you're getting yourself into, whether it's the instrument, the issuer, the company. Always know what you're getting yourself into. And finally, please note, the market is never wrong. Okay, when the market is going this way, kahit na anong chart namin, kahit na anong forecast namin, we will never be correct. We will never beat the market. Diba? The market is a living thing. It has its own mind, its own heartbeat. And so it will really move the way it wants to move, despite all the forecasts. Okay? But that said, just be in the market, in one instrument or the other, and make sure that you're making your money work for you. Okay? That's it for me, Ingrid. Thank you very much.
Thank you so much, Sir Peter. Grabe. In a short period of time, we were able to tackle from bonds to stocks to money markets to mutual funds, and meron pa tayong ETF and also the risk that comes with it, and as well as meron pang things to ponder and things to remember from Sir Peter. So again, thank you so much, Sir Peter, and definitely investing ensures not just our future, but of course, our present as well. So, moving on to our panel discussion, let me introduce to you the panelists this afternoon. First up is we have Miss Belle Pajarillo, one of our sorry, yes. First is we have Miss Bel Pajarillo, one of our senior relationship managers at First Metro Asset Management. She's a licensed certified investment solicitor and has taken and passed the Trust Operations and Investment Management course. She's been with FAMI for 14 years and completed her college degree from Polytechnic University of the Philippines and a proud scholar ng bayan. Next is we have Mr. Roberto Marco and Samson. He is an SEC licensed certified securities representative and certified investment solicitor. He is also a Bloomberg certified financial markets professional, graduated from the Ateneo de Davao University with a degree in industrial engineering and attained his master's in business administration degree from the same institution. Mr. Samson is currently the head of Mindanao for First Metro Securities and has been based in Davao since 2014. Last but not the least is our speaker earlier, Mr. Peter Bautista, the first vice president and the head of the sales and distribution group for First Metro Investment Corporation. So I'm I'm excited for this panel discussion because we do have a good representation of everyone, every type of investor, and definitely we will have an exciting sharing of insights on the biggest questions a Juan will have in terms of investing. So let's start this with something that all of us can answer. In terms of managing your financials, where do you put your money most? Sige, let's start with Sir Robbie.
Okay, so good afternoon, everyone, and thank you, Miss Ingrid. First of all, for me, we must make sure to have an emergency fund, especially in times such as these of higher inflation and sudden health scares. I think the peace of mind that an emergency fund provides cannot be understated. So after that naman, I put most of my investable funds in stocks, especially blue chip and dividend paying ones, since my horizon is relatively long-term still. And also to further diversify, I also invest in mostly equity-laced mutual funds. So given the rising interest rate environment though, I'm also starting to consider increasing my exposure in fixed income securities.
Right, thank you, Sir Robbie. How about you, Miss Belle? Where do you...
Ano ba yan? Nasagot na ni Robbie yung isa, sagot ko yun sana. But yeah, just to share with you, most of my part of the income that I am getting from are placed in savings, because it's important that you have this emergency fund before you can even start investing. Kasi kung wala kang emergency fund, then you cannot, I think you cannot start investing. Kasi if whatever happens to you, there's an emergency. So what will happen? You will be forced to sell off your investment. So that's the first thing that you need to do. And that's what I'm also doing. Yung nasabi ni Robbie that you must set up first your emergency fund, and then after that, you could do investing for your long-term goals mo, or medium-term or short-term, whatever it is. But for my case, nasa mutual funds ako, nasa managed funds. It's because I don't have the time to really monitor my investments. So most of my funds goes with managed funds like ours, FAMI mutual funds.
All right, thank you, Miss Belle. So next question is, sige, let's go to Sir Peter. What factors, I think nasagot na rin to actually kanina ni Sir Peter, but siguro in a shorter sense, what factors do you consider before making an investment?
I think diba, part of the tips I mentioned earlier, you have to know what you're getting yourself into. Okay, hindi porke may nagkwento sa'yo na mataas ang interest rate nito, bibilin mo na. Hoy, maraming bumibili ng stock X. It's not as simple as that. Okay, guys, whenever you buy something, whenever you get yourself invest in something, diba, aalamin mo muna lahat. You have to understand the business, how they make money. Diba? So if at the very least I need to know what it's all about, what the business is all about, paano ako papasok sa stock na yon, sa bond na yon, paano ako lalabas. It's that eh. It starts with information so that you get that good decision, 'di ba? To be able to decide. Parang ano lang yan, 'di ba? Parang love yan, 'di ba? You have to know what you're getting yourself into. So if you're gonna love your investment, know everything there is to know about it.
Thank you, Sir Peter. Anything to add to that, Sir Robbie?
Well, yun, I think Boss Pete perfectly captured already the most important factors to consider, no? Especially yung fundamentals. You really do have to have a good understanding, a good grasp of the business that you're investing in. So siguro I'll just add a few other details that I take note of when I do make an investment. So chief among them is the liquidity of an investment. And this was also discussed by Sir Pete kanina, no? So being able to enter and exit an investment position kasi as close to market value as possible is very, very important, especially in times of emergencies where time is a huge consideration. So you really should be able to liquidate your positions quickly. So siguro my advice would be, let us not only look at the potential return of an investment, but also the ease in which we can buy and sell that particular investment. So this is actually a huge reason why most of my portfolio consists of blue chips and reputable mutual funds, as it lessens my worry should I need to liquidate a position.
Yeah, definitely. Definitely. Yeah, one of the greatest factors is timing as well. Yeah. For you, Miss Bell, how do you balance budgeting for your monthly expenses and find the money to save and invest at the same time? And what are your tips?
Yan. Actually, magandang tanong yan, no, Ingrid. Baka some of our audience who are having struggle in making their budget. So just to share with you, in my case, since I have my own family and as a wife, and I think in most cases, I think it's most of the time, it's really the wife's duty to be the budgeteer o yung taga-budget sa pamilya. Pero Boss Pete, Sir Robbie, hindi ko tinatawaran ng kakayahan yung mag-budget for the family. But in my case, to keep a balance, sa pagbabudget for our family, it's important that I have this list of our expenses. So just like with personal finance, from that list, if you do keep a list of your expenses, from there, you could review if kung saan ka ba sumusobra ng gastos. Doon sa list na yun, makikita mo if kailangan ba talaga yung ginagastosan mo na yun. Otherwise, kung hindi naman siya part talaga ng basic needs mo, baka you could just take it out from that monthly expense mo, di ba? And I make sure that most of my budget is napupunta talaga siya dun sa basic needs and to our priorities. In personal finance, as much as possible, keep your expenses small. Kasi to be able to set aside a budget for your savings and investment, just like what you have shown dun sa video mo, Ingrid, di ba? Ang formula na lagi kong pinapractice, kumbaga, as a financial advisor is your formula should be income, minus mo na kaagad dyan yung savings mo and para dun sa investment. And whatever is left over for your, from that equation, yun yung hahatiin mo for your expenses, di ba? So right away, after you receive your income, gano'n man kaliit yan, kung medyo malaki talaga yung expenses mo, hindi ka ganun kalakihan yung income mo sa family nyo, magsubi ka na kaagad ng certain amount for your savings and investment. In that way, automatic, mapaglalaanan mo talaga yung budget mo for your savings or para din sa investment mo. So just to share with you, in my case, I do a lot, 30% ng income ko, yun yung tinatabi ko for my savings and mostly for investment. Basically, yung investment is for our priorities. Just to share, one of our main priorities sa family is yung to set up this supplementary retirement fund namin mag-asawa. And then another goal is para dun sa educational fund ng dalawa kong bagets. So with that, sa investment, I put our funds sa mga medyo aggressive type of investment like equity-based mutual funds and meron din mga direct securities investment. But as mentioned earlier, since I don't really have the time, most of the funds goes to the managed fund, and we have a portion din dun sa mga direct securities. So why do I choose those two types of investment product? It's because my investment goal is something like for long term, and I can afford to take a higher level of risk to maximize the potential returns of my fund. So guys, that's just my sharing of what I do as a wife sa pagbabudget ng aking
Thank you.
income, yung aking personal finance. Yeah.
Yeah, I think Sir Peter raised his hand. Baka
Hindi,
naman.
nagkamali lang kasi akala ko may husband's point of view. Nagkamali lang. Sorry.
Okay. Yeah, and so thank you, Miss Bell, for your answer. Yeah, definitely you have to list down your monthly expenses, and of course, napakagandang formula na dapat hindi natin kalimutan is ano nga yun ulit, Miss Bell? Ano nga ang pinaka-importanting formula?
Importanting formula again is income. Less nyo na kaagad dyan yung for your savings and investment. Again, as mentioned ni Ingrid, no matter how small yung amount na sinisave nyo or tinatabi nyo for your saving and investment, remember guys, kahit 500 pesos lang yan, after how many years doing it religiously, regularly, it will go a long, long way. And then whatever is left over after that equation, yun yung ilalagay nyo for your expenses.
Thank you so much, Miss Bell. And of course, yan, napansin nyo kanina dun sa end na sagot ni Miss Bell is one of the things na kinonsider niya is yung goal nila for their retirement. So again, when you invest, you always have to determine the why and your goal. Ayan. So next question, this will be for everyone in for our participants. And the question is, what motivates you to invest? Ayan, please type in the chat box. And while you're answering this question, let me just answer that question na rin. And my answer for this one is it will always be to be financially independent. And that was the first goal that I had since graduating and from college, and that will always be my goal, staying ahead of inflation. And probably the one thing that I want to achieve, which I learned from my parents, that is early retirement. And I honestly don't see myself retiring early because I love what I'm doing right now, and probably I will keep working on it for the day I die. But having that luxury to have the decision to retire or not is one of the reasons why I am motivated to invest in the first place. And let me just, ayun, sorry na ano ko sa dami ng sagot dito sa webinar chat. Yes, Miss Rochelle also mentioned financial freedom and my parents' peace of mind. Yes, definitely, parehas tayo, Miss Rochelle. Yan, ang dami. Yes, ang dami ding nagsabing same, and someone said retirement and additional interest or gain of income, financial freedom. Ayan, someone said to buy a house, to secure my future and to let money work for me. Yes, ang dami. Grabe, nakakatuwa. Thank you so much for answering that question. And iba-iba talaga tayo ng motivation. Pwedeng parehas, pwedeng mas madami, pwedeng mas onte. But the good thing about it is we know what we want in life. That's why we can invest. Okay. And after what Sir Peter discussed earlier, I'm pretty sure we all have an idea what investment best suits for our motivation to invest. Now, pumunta naman tayo sa mga batikan. Sir Robbie, we know the current situation of the market. And the question is, would you stay away from risky forms of investments, or should I accumulate more and be more aggressive?
Well, thank you for that question, Ingrid. No? So as with almost anything in life, no, the answer lies somewhere in between that. So it's not always good to stay completely away from risk. It's also not a good idea to be very, very aggressive. So I think this is where the famous saying, time in the market is better then timing the market comes into play. And I think that that message was also relayed by Boss Pete earlier, no? So that being said, we think the best answer is instead of staying away, we should be picky. So attending this seminar is actually one of those ways to become a much more selective and well-informed investor. So we should be picky of our investments. For example, there are a lot of stocks there where their share prices haven't recovered yet from the COVID lows. But keep in mind that the economy has nearly fully reopened, so we can take advantage of that fact by picking from those that can rebound or are currently rebounding and are benefiting from the economic reopening. So usually these are stocks that are placed within the banking, property, and retail sector. So there are actually mutual funds available that take advantage of those facts. No, we have consumer equity-laced mutual funds. We have actively managed mutual funds. So those are things that investors may actually want to consider right now.
All right, thank you, Sir Robbie. How about you, Sir Peter? We know you are also experienced in terms of investing, and what are your views now sa current market condition natin? How should a new investor react towards the market?
Uh, the market's the market is not for the faint of heart. Hindi siya, it's so volatile. Medyo rates going up one day, slightly down the next day. Stock market's really thin. The volume's really thin. For somebody who's new, and assuming your the question to your why is I just want to start investing. You start off with the risk-free. Diba? You start off with the risk-free. You start off with the short. Diba? Not too long, stay short. If you just want to be involved in the market, not bad to start off with money market instruments, whether it's the money market fund or treasury bill, something short na muna. Actually, for that matter, start off with the time deposit. If you start off with the time deposit, you start really, really safe. Hindi pang ano to. This market is really difficult to navigate in. It takes some lakas ng loob and a lot of reading to go heavy on this one. So right now, stay liquid, stay short. But as Robbie pointed out, konting tapang out there. You have to start putting in a little risk every so often so that you don't just end up being safe. Safe is just safe, diba? It doesn't make money, not much money. It's one thing to lose money, but also at some point you'll realize, ay, sayang, could have made more if I just put in 500 pesos more, 1,000 pesos more. So stay safe instruments right now, but start accumulating as well. And as Robbie pointed out, be picky. Not everything. Hindi siya lahat bibilin. Make sure, and again, we go back to make sure you know what you're buying into.
All right, thank you, Sir Peter. Ayan, so given our time, ayan, medyo limited ang time natin and ganun talaga pag masaya ang usapan. So let me just briefly go to the Q&A portion of our session. Ayan, I think this question could be for Miss Bell. How much is the minimum amount in investing and does it have to be 5 digits and up?
Yun. Magandang question yan. But to be specific, like for example, in our FAMI mutual funds, guys, very retail, affordable, kayang-kaya ng Every Juan. You can start investing for as low as 5,000 pesos. And then if you want to make it a habit and to slowly build up your portfolio or your fund, you can make an additional investment for as low as 1,000 pesos. The amount that has to be placed in an investment really depends on each and everyone's case. Kasi meron dyan yung iba, malaki na kaagad yung available fund, excess fund, idle funds na pwede nyo i-start kaagad sa investment. Meron naman yung iba na just to start and make that baby step. You could do the initial investment. There's no problem with that. Meron yung iba sasabihin, ay nakakahiya naman, minimum lang yung i-invest ko. But remember guys, if you don't take that baby steps, yung sabi nga ni Sir Peter, just to be able to put your feet on the water para matest nyo how does this investment works. You can start even dun sa minimum initial requirement para at least you would have that first step na to make your investment.
All right, thank you, Miss Bell. Ayan, last question ha from for Sir Robbie naman. Hello, I'm 24 years old, turning 25 this November, and I have learned a lot from Mr. Bautista's discussion on securities and the risks that may happen during investments. And I had a goal to save 100,000 pesos before I start applying for investments because I was unsure of the minimum I needed for the investments. And I would like to start an investment where it is low risk and is easy for me to track, and where and what type may I start with, and am I able to grow the investment to something that has a higher risk?
Well, thank you. Thank you for that question. And it's actually, 100,000 is actually more than sufficient today when it comes to starting investing. So congratulations sa'yo, no, for having a really, really nice goal of your initial capital. So to answer your question, no, there's actually a lot of different asset classes that are available right now in the market. And Boss Pete laid it out perfectly kanina, no? So I'm sure we have a pretty good idea of what investment asset classes are out there. So if you're looking for something that is relatively low risk and easy to track, something that you might want to consider are the bonds, fixed income securities, or even bond funds. Because again, we go back to the fundamentals, di ba? Yun yung laging inuulit-ulit ni Boss Pete kanina. Kailangan naiintindihan mo ng mabuti yung investment mo. And when it comes to investments, no, one of the safest investments out there are government debt, no? So that's something that you can actually consider in because they're going to give you regular coupon payments. You're able to budget, no? Alam mo kung magkano exactly ang papasok sa portfolio mo na pera, and you are able to schedule it kasi they tell you when the payouts are going to happen, whether quarterly ba siya or what. So if you're starting and if you're looking for something low risk, that's what I would recommend. And as you gain more experience, as you go through the markets, no, yung naiintindihan mo na yung akyat baba ng stock market, ng capital markets natin on a day-to-day basis, perhaps you might want to consider moving into the riskier asset classes like equities, like stocks, yung common stock specifically. You might even want to consider yung mga mutual funds that are equity funds. No, so the beauty of it is there are actually highly specific mutual funds available right now. So pwede ka talagang mag-drill down into a specific sector, into a specific investment strategy. So it all depends on your investment goals talaga. You might even want to consider yung mga real estate investment trust because those give you the benefit of having regular dividends, no? But also they give you the opportunity to gain by capital appreciation. So yun yung parang nagiging normal flow, no? That's how I started no? I actually started with bond funds then when I started investing years ago. So it's really quite normal to feel that way. Kaya I hope I was able to help you out, no? But again, congratulations for having a really, really good target for an initial capital.
Yeah, thank you so much, Sir Robbie. Ang galing, no? Ang gagaling ng mga panelists natin. Very efficient but fruitful answer. So again, thank you so much to our panelists for sharing your valuable time and of course your knowledge in answering the questions from our audience. And it was indeed a productive afternoon for everyone. Now, let's move on to the another exciting part of our program. We will be announcing the winners for our pre-event game posted on FAMI's Facebook page. So our tech team will flash the Juan for the win wheel with the names of all the entries we received for the pre-event game announced on Facebook. So without further ado, let's spin the wheel. And the three winners will win 5,000 pesos additional fund investment for their fund of choice with FAMI. All right, congratulations, Miss Time Tejada. Next one. So we will contact the winner separately to explain the details for your prizes. Right? Congratulations, Miss Mary. Last but not the least. And congratulations, Miss Geraldine. Again, big congratulations to our winners this afternoon. And let me just invite again to unmute Sir Peter, Miss Bell, Sir Robbie to share just one important tip for everyone. Yeah, let's start with Sir Robbie.
Yes, thank you, Miss Ingrid. So again, siguro the one thing no that we should take away from this webinar is the fact that we should always take advantage of opportunities when they come. So I believe there's a reason that you are here this afternoon. There's a reason why you chose and why you were able to listen to Boss Pete discuss investments. So I hope we act upon it. No, kasi sometimes knowledge is really not enough. No, we have to put our knowledge into action, and that is especially true for investments. Kasi the only time that we will really make money from investing is if we actually do it. So I hope naging enlightening. I hope naging inspiring po yung presentation this afternoon. So much so that when you leave this webinar, you are feeling energized to start investing for yourself and for your future. So thank you so much.
Thank you, Sir Robbie. How about you, Miss Bell? Any tip?
Yes, siguro just to add to what the other panelists or Peter was Peter Robbie has said. Maybe just to share to our to everyone, risk is not just about losing money. Kasi para dun sa mga masyadong conservative, risk is also not having enough in the future if you go too conservative. So taking a risk is also important to be able to make your money work for you. And then maybe lastly, yun nga, para doon sa iba na naman problema, wala akong fund para to start yung kanilang investment. Always try to live within your means or if possible, below your means. Because in that way, you'll be able to have or meron kang mailalagay na fund or budget talaga para sa savings and investment mo. So basically yun, always try to live within your means and if possible below your means so you could have your fund or your budget for your savings and investment. That's it for me.
Right, thank you, Miss Bell. So yeah, and last but not the least, our speaker earlier, Sir Peter Bautista.
Without sounding like I'm repeating myself, guys, the guys who are just going to the market right now, ngayon pa lang mag-invest, be guided, never forget the why, be informed, know what's out there, understand everything as much as you can, and be bold. Diba? As Robbie pointed out, you can't be on the sidelines all the time. You have to take that first step. Being in the market, even in one form or the other, is a good start and a good place to be in. Make your money work for you guys. Okay? And same time, good luck to everybody. As I tell my sales guys, happy hunting. Ingrid, so if there are just questions, I saw some comments. If they just need other, they have questions out there, if they can just let us know or through FAMI.
Yes,
Okay.
yes.
Happy hunting, everybody. Thank you. Thank you.
Thank you so much, Sir Peter again, and Sir Robbie and Miss Bell. So as we come to the conclusion of this afternoon's event, please don't forget to evaluate our activity this afternoon by answering the poll found on your screen. Yeah. So this is just a 4-question survey. And ayan, so thank you for your answers. Yeah. Okay, are you now more motivated to invest? Ayan, and which um, investment product would you likely go to after this session? Okay, so thank you for answering, and we are delighted by the active participation and, of course, the sharing of knowledge between our speaker, the panelists, and, of course, our participants. This has been your host, and keep this in mind, remember your priorities, remember what matters to you the most, and always remember your first. Bye, everyone. Thank you again for joining.
When was the last time you did something for the first time? You remember that feeling of hesitation. Maybe you're not ready. Perhaps you're not good enough. You doubt yourself. It's a long road ahead. And right now you think, safe is a good place to be. You take a step back, but in doing so, you see the whole picture. You remember the stakes you were brave enough to take. So you shout at the unknown no longer, because you are your own master. You rise up, because you know you're not alone. Because you stand on the shoulders of the ones before you. And through them you realize you are more afraid of not trying than failing. They hold your hand, lead you to the peak of your potential. And once on top, you take the leap and do it. The first time you flew and tasted freedom. The first time you went the extra mile and never looked back. The first time you understood that something so small could change the course of your future. The first time you put yourself first. At First Metro Asset, we value you and your achievements. As we navigate through this better normal together, we are here to help you cherish your firsts and make those moments last.
How to start your investment journey with FAMI. Go to www.fami.com.ph and open an account online. Fill out the necessary information. Upload a copy of your valid ID and signature. Here are the list of valid IDs we accept. Attend your online interview. Lastly, make your initial investment in any of our available payment channels. Expect an SMS from FAMI to confirm your account opening and subscription.
With nearly 6 decades of investment banking experience in the Philippines, First Metro Investment Corporation knows exactly how to navigate unexpected events, including the COVID-19 pandemic of the past couple of years. As the investment banking arm of Metro Bank and as a prime mover in the development of the Philippine capital markets, First Metro uses its in-depth understanding of markets to find smart solutions for its clients. That is why it won the Asia Money Award for Best Securities House in the Philippines in 2022. Much of the hard work behind the scenes is spearheaded by 3 people. Jose Patricio Dumlao, who is First Metro's president, working with Daniel Camacho, Executive Vice President and Head of Investment Banking, and Peter Anthony Bautista, First Vice President and Head of Sales and Distribution. Together, they ensure that First Metro offers a complete suite of services to its clients. This spans everything from debt and equity underwriting and financial advisory to government and corporate securities brokering, equity brokering, and asset management. First Metro's underwriting strength is complemented by its ability to distribute widely, not only to its corporate and institutional clients, but also to its retail clients. When it comes to its retail reach, First Metro leverages the strength of the branch network of Metro Bank and the growing clientele of its online brokering arm, First Metro Securities. This means that across primary ECM and DCM, First Metro worked on some marquee deals in the past year, giving it a market share of 87% of all capital markets transactions in 2021. But that wasn't all. The firm also ensured its clients and the investing public were informed about key market developments amid the pandemic. It did these through investment literacy webinars and market briefings, both of which got a solid response from clients. First Metro is not staying still. It is always keeping an eye on finding new business opportunities and enhancing its existing capabilities across products. All these factors ensure that First Metro remains a front runner in the Philippine investment banking industry.
Trading on the go? Here's First Metro Sec Go for you. Easily open your account today with this app. You can download the First Metro Sec Go app through Play Store or App Store for free. If you already have it on your device, simply open the app and click Sign Up Now. Next, you need to create a user ID, read and agree to the terms, and provide these information. Once you're done, click the link on the email verification sent. Now, let's complete your account application. First, input your account information. Then, provide your user information. Next, accomplish the investor profile form. Almost there! Read and agree to the terms and conditions. Then click Agree. You will then receive your reference number through the app. Don't forget to save this number because you will need it for your initial deposit. Next, upload or take a photo of these requirements. 1 valid ID, 3 signatures on a piece of white paper, proof of address, and proof of bank account. If you're self-employed, there are additional requirements. Now let's fund your account. You can make your initial deposit through bills payment, online fund transfer, over-the-counter deposit, or remittance. The minimum 5,000 pesos or $100 can be used to invest in stocks, funds, and bonds. Next, you will need to verify your identity. Simply take a photo of your ID and take a selfie. You're all set. An email confirmation will be sent to you in 2 to 3 business days. Happy trading! For more information, visit our help center at help.firstmetrosec.com.ph. All the options and convenience within your reach through International Finance's best online broker and best online trading platform for 4 years in a row. With First Metrosec, it's your future first.